The market is bracing for a potential storm of volatility after Federal Reserve Governor Michelle W. Bowman hinted at three interest rate cuts in the coming months. According to Bowman's remarks during an economic symposium, the Fed is closely monitoring inflation and employment data to inform its decision making process. This has sparked speculation among investors about the likelihood of rate cuts. Recent economic indicators have been mixed, with the latest GDP growth rate showing a 2.1% increase in the second quarter, beating expectations. However, manufacturing production has been slowing down, with a 0.5% decline in June, according to data from the Federal Reserve. The potential for rate cuts comes as the Fed seeks to mitigate the impact of trade tensions and a sluggish global economy on domestic growth. Bowman's comments have reignited debate about the effectiveness of monetary policy tools in stimulating economic activity. Market participants are closely watching the yield curve, which has been inverted since May, signaling growing concerns among investors about the economy's trajectory. The spread between 2-year and 10-year Treasury yields has narrowed to around 48 basis points, its lowest level in over a decade. The Fed's balance sheet expansion has also raised questions about the potential for rate cuts. With $3.8 trillion in assets on its books, the central bank is positioned to continue providing liquidity to the market through bond purchases and other measures. Bowman's comments have sparked a renewed focus on the economic outlook, with many analysts reevaluating their forecasts in light of the Fed's potential actions. While no hard predictions can be made at this stage, investors are bracing for increased volatility as they adjust their positions accordingly. The S&P 500 has been relatively resilient, hovering around its all-time high despite rising concerns about trade wars and global growth. However, other asset classes have been more affected by the uncertainty, with gold prices surging to new heights and the VX index spiking above 15. As investors navigate this uncertain landscape, they will be watching closely for any further hints from Bowman or her colleagues at the Fed. With three potential rate cuts on the horizon, the market is primed for a significant shift in monetary policy, which could have far reaching implications for asset prices and economic growth.